Tax advantages of Hindu undivided family in India? Ra separate tax entity. Hindu undivided family, recognized as a distinct tax entity, possesses its own permanent account, number, and files a separate income tax return, offering tax planning opportunities. Hindu-ided families, like individuals, benefit from the basic income tax exemption limit, with income up to the specified threshold being tax-exempt. Hindu undivided families are taxed using the same income tax slabs as individuals, allowing them to benefit from the progressive tax rates corresponding to different income levels. Hindu undivided families can claim deductions and exemptions under the Income Tax Act, covering contributions to funds, house property expenses, and long-term capital gains. Hindu splitting. Hindu undivided families can claim deductions and exemptions under the Income Tax Act, covering contributions to funds, house property expenses, and long-term capital gains. Tax planning for capital gains. Hindu undivided families, in the case of capital gains from asset sales, can strategically plan to minimize tax liability by leveraging indexation and available exemptions under the law. Clubbing provisions. Hindu undivided families can strategically plan to utilize legal exemptions and deductions while navigating provisions that allow income splitting and prevent tax evasion through clubbing rules. Succession planning. The Hindu undivided family offers a structured approach to succession planning, with the principle of survivorship ensuring the seamless transfer of property and assets to surviving co-partners, ensuring continuity. Hindu undivided families can receive tax-exempt gifts from specified relatives, including lineal ascendants and descendants, as these gifts are exempt from tax in the hands of the recipient. Wealth tax. Hindu undivided families are exempt from wealth tax, unlike individual taxpayers who may be liable for this levy on specified assets exceeding a certain limit.